Hi, we are JHJ Limited. This is our business proposal for entrepreneurial finance. I am Jordan, this is Holly, and this is Jesse. Holly will now continue from here onwards.
So JHJ has 3 employees and they produce hemp bags that are reusable, durable, and are used to minimise the use of plastic in the environment. We have highlighted the opportunity in the market to find a material that is strong and can be attractive as a bag and is designed and manufactured in New Zealand, which we came across hemp. So a lot of people don't really understand the use of hemp and that kind of thing as well, and so our goal is to make hemp a fibre that can be used for a bag as one of the strongest fibres. And we have found that from past experiences of the current reusable bags that retailers do offer, that they're continuously forgotten about when you purchase a reusable bag. So a lot of people will buy a bag, take it home, and then when they go to the supermarket again, they'll be buying another bag because they've forgotten their reusable bag. So our mission is to create a bag that is sturdy, where people say, I better not forget this bag, and because it's too hard to forget about, they won't. Because it has the fashionable aspect beside it as well, this can be used in everyday life, including just for your shopping and for going to a friend's house or anything like that as well. Our target customers is ideally everyone. However, we do know that this has kind of been segmented into different categories as well at the moment. So this is JHJ's initial balance sheet as at the development stage. Cash represents both cash and marketable securities, with $10,000 in the cheque account and the other $5,000 in short-term investments. We have $30,000 of equipment, receivables, inventories, payables, and everything else were $0, as nothing has occurred in the development stage yet. Now with our seed financing of JHJ, long-term debt where the venture was loaned $20,000 by a friend, and we had $25,000 contributed between us as the owners. Therefore, finalising our balance sheet with $45,000 total assets and $45,000 total liabilities and equity. At the start of operation, we decided to create a legal organisational form of a limited partnership for a number of reasons, including the tax advantages of being under the personal income tax rate. Because there are 3 of us involved in the development of JHJ, a partnership was the most effective option. This also provided us with the ability to have both unlimited and limited liability by confirming 2 general partners, and the other one, myself, who was happy to be limited to my investments. The following financial statements and schedules are for the 6-month startup operating period. Firstly is the income statement. However, the next couple of slides, which are the internal operating schedules, will help to explain the figures more in depth. For example, like the cost of goods sold amount. We decided to price the hemp bags at $30 each, providing an approximate 60% markup price and keeping it affordable for our target customers. Net sales represents 1,250 units sold to give a total of $37,500, less COGS of $21,250 to get gross earnings of $16,250. Depreciation was $1,000 on our $30,000 equipment to have an EBIT of $6,250. The interest rate on the $20,000 loan from the friend is 8%, which makes the interest expense $1,600, and then continuing on to get a net income profit of $3,488. To make each hemp bag, JHJ must purchase hemp for $5 and wood pulp backing for $2 each unit. Direct labour costs were $10 per unit. 200 bags were produced in July and August, and beginning of September, the production increased to 300 units
resulting in 1,600 bags in the first 6 months of operation. Overall, during the 6 months, the cost of production was $27,200. The cost of goods sold schedule shows that 1,250 hemp bags were actually sold during the 6 months. Sales went from 0 in July to a peak of 500 in December, finalising with a total of 21,250 for the cost of goods sold, which was put into the previous 6-month income statement. Because JHJ began production in July, there were no finished goods on hand at the time. In September, monthly production purchases increased to $5,100 per month from $3,400. Although there was a peak in sales in December, as discussed in the cost of goods sold schedule, finished good inventories at the end of each month increased to a peak of $9,350 in November, which represented the 550 units sold at a production cost of $17. $6,800 is the year-end inventories which went into our balance sheet. I'll pass it on to Jordan now.
Hi, I'm Jordan. We'll be talking about JHJ's limited balance sheet as of the 31st of December. JHJ has maintained $5,000 in the check account and has spent the remaining marketable securities. Receivable represents credits sales of 15,500 units at $38 each. In December, at the year-end receivables, 6,800 are at the end of year inventories, which have shown just as before as inventory scheduled. Assets grew from 15,000 as shown in the balance sheet in the development stage to 26,800 in 6 months. Gross equipment remains the same amount at 30,000, with 1,000 accumulated depreciation. Building and other long-term assets will remain at zero and have the final total assets of 58,800. Continuing on to the liabilities. Payables of 2,100 were from the credit purchases in December to produce 300 hemp bags. Wages for the month were $1,000. Referring to other securities and referring to other liabilities, JHJ did not have enough money to sustain the first 6 months of operations, so we borrowed $6,212 to secure a source of startup of financing to stay afloat, creating a short-term liability and then creating a short-term liability to then have total current liabilities of $10,312. The long-term loan from the friends remained the same amount, and owner's equity increased from $25,000 to $28,488. $3,488 net profit income was shown in the income statement, and finally the total liabilities and equity value of $58,800 to reflect the equal value of our assets. Lastly, the statement of cash flows for the last 6 months of operation. If you do recall from our initial balance sheet, there's no initial inventories. In receivables, inventories, payables, or accrued wages. Therefore, these balances remain the same as the figures from JHJ's 6 months balance sheet. Net cash flow from operations ended negative in $14,212, while there is no increase and effect into gross equipment. Finally, the net charge including cash amount was a deficit of $8,000. We do need to be careful as we have allowed $15,000 in sales on credit, so the sooner we can collect the money, the better. JHJ is in the current situation of cash burn. To be exact, $14,212. Rather than cash build out of course in the startup stage, it'll be more difficult to build cash than to burn, as we're running a venture on pretty much nothing. Therefore, we have to use money to make money. To cover the cash burn, JHJ drew down a majority of their cash and spent their market securities from an initial $15,000 to $5,000. JHJ was still short $6,212, but I was able to borrow this amount from reducing the potential financial risk for the venture. Our projected 3-year income statements. Now, analysing our future cash flows and projected 3 years income, JHA is expected to sell 5,000 units in 1 year, 11,000 in the second year, and in our third year having revenues as follows. Our COGS is calculated at a consistent 65% of revenues, as well as $35,000 annually for marketing expenses and $50,000 per annum for administration expenses. The depreciation and interest is also expected to be $10,000 and $15,000. As shown in year one, year one makes a loss of $74,750. However, in year two, JHA is expected to grow and have a net income of $7,350 at a sales rate of 11,000 units, and again in year three, projecting $73,500 net income. Operating break-even analysis. The ratio of COGS revenue was constant at 65%. To determine JHA's break-even to survive, we projected our 3-year income statements. The ratio, as I said, was 65%, in which the COGS is the only variable cost. Annual cash rate is the annual cash fixed cost of $100,000, including $50,000 admin expenses and $35,000 on marketing expenses, as well as $15,000 on financial costs. Therefore, to finalise our proposal at $30,000, to finalise a proposal at $30 our selling price per unit, JHA needs to sell 9,524 units annually to break even, and will then succeed the survival stage. We thank you so much for watching. I hope you enjoy our presentation. Thank you very much.